Hi, welcome to the Market Alert for Thursday, the 8th of February 2018. So yesterday in the pound, this moving to the downside, and I'll show you why in just a second. We had a bit of buying to begin with, 3 buying bars, then massive selling coming into the market, and then the market headed south. We had a bit of a dead cat bounce and then resumed to the downside. And in the daily chart you will see that we're still sideways, but just before we look at more of this, let me show you why. We've got the bounce in the dollar index, which I spoke about last week, saying that we've had such a big move to the downside that we could expect a retracement and bounce in this market, and that's what we're seeing before continuing down. And that is why you've got the pound moving low. You can see the market coming there off the 61% retracement, drawn in from this low to this high, and that's why you're seeing a bit of a bounce there at the moment. So in the daily chart of the pound, the market sideways. It's put in a couple of new lows here on the low of this test, and that's going to be crucial now for this market. And again, if prices move back to the upside, you've got the fib retracements there in place, but at the moment stuck in a sideways range because of that pullback in the dollar index at the moment. Now in the Dow, massive bar ranges yesterday. I mean, you can see the major and minor support lines and resistance and psychological lines here, and you can see the market just driving through 100 points, and then back for 50 points, back for 100 points. Massive volatility yesterday in this market before eventually the market calmed down a bit. But even just to get this sell signal here required that change the settings here from 20 to 50, from our normal 8 to 25. So you can see how much volatility is in the market there at the moment. So making it very difficult to trade there, and certainly from the start, 100 points is a big swing in just one bar. Price is down on the overnight. You can see we've got more Asian uncertainty there. Market finding, you can see the volume kicking in around here as prices then hold and have been sideways since. And again, you can see there in the daily chart yesterday the market coming off a range of 700 points and starting to turn around and move back to the upside again, which brings up another point as well. We need the market through 24,945 in order to move higher, and also the high of yesterday now as well. So keep an eye on these. These are really important levels, these are, because again yesterday we saw some selling coming in at this point, and we need to overcome that. We've also come back below this one as well, the 945 area. So 25,000 we need the market to get through in order to move back to the upside there. And news-wise, what have we got out today? Bank inflation report for the UK. Official bank rate for the UK left unchanged. MPC official rate, purchase asset, inflation letter that Carney has to write to the government to say why inflation's increased. To be honest with you, a primary school child could write and tell them that, couldn't they? Yes, the cost of goods have gone up, Mrs. May, that's why. So honestly, sometimes these things that are put into place beg a belief, especially from so-called intelligent people. So they've got to put the letter in, see if they're going to get detention for it or not. It does make me laugh, honestly, some of these things. Common sense and logic goes out of the window. So that's the Dow, and let's have a look at the implied volatility. Actually, before we do that, let me just bring you to this article with Paul Craig Roberts, used to work for the Reagan administration. He talks about the plunge protections team's fraud here, and I've spoken about this many times. I was told I was a tin hat wearing conspiracy theorist about this, but it's well known now and documented, even on the likes of Wikipedia, which I have no faith in the content, but it is on there as well. And it was brought in by Ronald Reagan in 87 after the 87 crash, and the central banks can intervene by buying S&P futures, and no surprise really. And it's interesting to see what it said in the last bit, actually, just here in the last paragraph, because you read the rest yourself. My sometimes co-author Dave Kranzler and I think it continue until the dollar as reserve currency comes under attack. Neither of us believe that the fraud could be perpetrated this long, and that means the ramping and the blowing of bubbles in the markets. Two other world powers, Russia and China, are moving away from the use of the US dollar, but the consequences for the dollar could still be in the future. In the meantime, liquidity supplied by central banks and the interventions of the plunge protection team could send equity prices higher. And I couldn't agree more, because until they stop intervening, then the market can be pumped back. When they stop pumping, well, we'll worry about it then. And implied volatility down yesterday, even though we had a range of 700 points plus, including the overnight, 500 something on the main session. So pulling back slightly, and that's because of what you're seeing in the daily chart, the market trying to hedge higher, but not until we've had a bit of a consolidation phase before it can, and some decent news coming out to move it to the upside. Meanwhile, in Bitcoin land, I've drawn in this retracement here in case we get another move to the downside. The 76% here at 5965, which is where we came down to in this bar here. You'll see there the low of 5920, and this goes all the way back to July of last year, when Bitcoin was around 2,500, and so using this low to this high in December, 76% retracement took us back to where the market hit this low on Tuesday around midday. Again, we've still got that massive volume here. We had the massive volume here as well. We can see where these resulted. However, this one isn't just going to do that. It's more likely to do this before it eventually works its way back up to the all-time highs. I can't see this going away at any time soon, and as I said yesterday, the CTFC seem to be wanting to regulate it, which I suppose is a good thing in one way. Stop the massive volatility spikes that you see in this and make it a nice sort of intraday trade. The brokers bring down the spreads. I noticed IG have dropped from 200 to 70. It would make it a very nice intraday trading market indeed. Right, that will do it for this one. If there's anything to report, I will let you know. Other than that, as ever, thanks for watching. See you in the next one.